finishing off part 3 of investing in real estate. We can call it a number of different things. We've really kind of expanded ours on the Millionaire Real Estate Investor. This was a course that Gary Keller, who was the CEO of Keller Williams, was developed many years ago and evolved. He's an author of a number of books. I'm going to fast forward. Our founder, who is in Kitchener, he's too is an author of the Accidental Real Estate Millionaire. It's worth about $8 million, but about, I don't know, 18, 20 years ago or so, it wasn't the case. That's where he is now. So folks, I mean, it doesn't take us 20 years to get there. He's done extremely well in that 20 years. What we're really trying to convey is when it comes to real estate investing, we're not guessing at this. There is a system, there is a model, it is a business. And what we're now starting to do is we're going to be providing this type of information to our community, to our clients, our customers. They follow us, making it way easier than, so we show up online, but we're sharing, and we're sharing this. So tonight, I'm excited because we are doing the final part of investing in real estate. So with that being said, I'm just gonna switch my gear and I'm going to do what I call share my screen. And we are going to get into this. And before I share my screen, folks, bear with me for one moment. I want to make sure that I am okay. We're definitely gonna, and in a perfect world, we'd have all this lined up. Right now, this is where we are. So I'm gonna have to, one moment, and put that there. So this is, I'm going to say we're going to pick it off from here. So this is the Millionaire Real Estate Investors Work Network. So for those that haven't been watching, I want you to go to the YouTube. You can Google CC Realty Group South. So CC, and it's conception to completion, compassion and commitment, Cindy and Cardi, call Cleves. The CC is interchangeable, but go to CC Realty Group South. You're going to see a whole suite of videos. Subscribe because it's only going to grow and evolve. And this here is, there's part 1, part 2 already uploaded. This is part 3. So this is the basic third portion of this program, course we teach, seminar we deliver, and we have built on it. So when you get into investing in real estate, that means if you're renting right now and you decide you want to buy and you want to live there, you're investing in real estate. If you already are a homeowner and you decide you want to be, you want to have another property and you probably want to rent it out, you're investing in real estate. So the moment we buy and make the decision, we're investing. When we are looking at buying the second property or the third, then you're investing. Well, when it comes to doing this, some get into investing stocks and mutual funds and company, like it's all varies. And some are real estate. Real estate, I will say, folks, is the only industry where you're investing and it's a tangible product. And yes, it goes up and down, that's market, but over time, real estate goes up. So tonight we're going to go through a little bit around the Millionaire Real Estate Investors Work Network. I don't want anybody that's watching this to think it has to be perfect, because it's never perfect. But if you start thinking about it, tell all your friends and family. And if they start telling you, oh, you shouldn't, then ask them the number one question. Have you invested? And if they've only done it once and had a bad experience, then they kind of did it and gave up. Push through, because we all learn. And again, following us, we're here to kind of help you guys mitigate some of these risks so that we're not making all these mistakes. But we want to talk about it. We want to start sharing about it. My husband and I started, we had homes, but never a second property. We didn't really think about it. And it was less than 7 years ago. And we reached out to someone I knew very, very well, who's the accidental real estate millionaire, didn't have my license at the time. And he helped, and before we knew it, we bought an investment property. I learned so much in that time frame, but I didn't stop. Now it evolved from there, but tell your network. And we have more than one property now, folks, and just we would, if we can counsel, we can help guide so that people are like, you can, it can be wonderful, but it's always good to kind of work with some people that have done it. So tonight, the Millionaire Real Estate Investors Work Network. So what is that? Well, that is this, we went over this a little bit last week, but I want to just do a bit of a recap. The moment you start thinking about investing in real estate, folks, then people are going to start to show up. I cannot emphasize that enough. Don't worry if you don't have them all lined up. Just talk about it. Reach out, start to learn. We can go on YouTube. There's so many areas that we can get information from. But my number one suggestion, I'd say, as a guide is get the information for people that have been doing it and doing more of it and doing it. So you're going to have your inner circle. Then you got what you call your support circle. So that's, again, where we're getting a little bit broader. You've got an agent, you might have a lender, you have a lawyer, property manager, and then you have the other circle. And this circle just grows and grows. Mark Purdy, the reason, I hope, Mark, it's okay, we could share you. The reason I have Mark up here this evening is we ran the program, this part 1, part 2, part 3, we deliver this as a seminar. And one of the things that were really, really important, I found, is, you know, our network is growing. So Mark Purdy has 2 companies. They're both in Hamilton. And what does Mark do? Mark helps people keep more tax dollar in their pocket, and Mark educates realtors that they can educate their clients on how to invest. So Mark, now my apologies, this data might be slightly off. However, Mark is a real estate investor. His story, we have him back on. We've interviewed Mark a few times. You're welcome to check the YouTube channel. But Mark is all about educating, getting to the truth. So he keeps asking and learning and asking. So long and short, a number of years ago, him and his wife made a decision. They were going to sell, downsize, and they bought an investment property. And I might be off a little on this story, but he started asking questions, and he found that one lawyer told him something different, the province told him something different, the federal government. So he kept looking until he found out, oh, that's the answer. So Mark started to learn how all this works and how much money is left on the table. Because again, there's different vehicles you can invest in real estate, but he's really what we call my best practice advisor on when it comes to pre-construction and especially condos. So he can speak to that. Bring him on. We're going to have Mark back on again, and we'll interview, but just a wealth of knowledge, folks. So his focus, now this is really kind of his data, if you will. So the IP that this belongs to is Mark Purdy. And I just like to be the broker to bring the best practice thinking to my clients. So Mark is about new construction. And when it comes to new construction, one of the questions that comes up is, where do we invest? Where should you invest? Well, right now, if we just look at Ontario, and I'm sure that you guys can see growth, there's a shortage of homes for sale, and there have been for a while. And there's a lot of people moving in to Ontario, and we are up against a demand. The shortage of homes isn't going to go away anytime soon based upon the data that we see. So what does this do? There's competition, folks. The mortgage rates in Canada, they're at an all-time low right now. So if we look at people like Warren Buffett, what does Warren Buffett tell you to do? Well, when you invest, you use other people's money and you borrow it at a low cost. Well, isn't that kind of real estate? So it's investing, folks. When the market, the rates are really low, it's where we're currently at, and the demands are high. We've got lots of companies. There's just not, typically it scales. And when we get into real estate investing, we know that 90% of the wealth it's made in real estate investing. So where do you consider investing? Within less than 100 kilometers from where you live. Some have chosen abroad, not to say that they might have people that can keep an eye on the place or whichever, but usually when you start, you want to stay a little close to home. There's pros and there's cons, folks, of different types of houses. So the pros and the cons. So if we get into them, let's look at condominiums. Well, the pro is it's lower than the price of a home in an area. The pro is the maintenance is included. So basically, what does that mean? Well, let's just say that all of the exterior, the windows, the roof, the parking, the snow removal, even that is included in what we call condo fees. The pro, there's more amenities. There's a lot of condos are going up, folks. And when we think about footprint, if we don't have a lot more land, they're going to go up in its lifestyle. But the con on a condominium is sometimes condominium have what they call high HOA fees. What does that mean? That means, the property management, the condo fee. Sometimes when buildings, as they age, those condo fees can go up. And then the amount of price, the value or what they sell for may not be as high as it used to be, but the condo fees can go up. Now there's a story on why that is. Again, that's another course, another day. The other con is only own a percentage of the shared land. So that's the other thing from a condo. You don't own all the land, you just own a little percentage. And the third is that they sometimes there's a less appreciation typically in a condominium in terms of, let's say it's a single family. Now, if it's a single family, a little different. If it's a single family dwelling, the pro is, as sometimes people would say, it's the easiest to resell. Typically surrounded by owner occupants, and there may be more appreciation. The con is you only have one unit to generate income. And the other con is when you have it vacant, it's 100% loss. If it's just a one family, like one family home. But if we take that one family home and we make it a duplex, and we can do that, there's different ways. The pros there, folks, it's typically close or to family school, could be parks, schools, family home neighborhoods. There's less risk than a fourplex and more cash flow than single family because you now have 2 units you could rent out. The con is it's again a little bit on the lower in the appreciation and usually surrounded by many other rentals. Now duplexes, not always, it depends. The more we get into the multi-residential, yes, they can be surrounded by others. The fourplex is when you have 4 units in one building. Same thing, pros generates higher cash flow. So think of that, you could have a long bungalow and you convert it. It could be converted into 4 units. You could have a house and you convert it into 4 units or 3 units. So again, more cash flow. But the con is you typically have a little bit more upkeep. The tenants might damage, less appreciation, and there could be tenant conflicts. So, what do they say are the next steps? What do we do? Anytime folks are getting into real estate investing, whether you're doing it just for yourself or you're looking at buying that second or third property, you really, really want to have a very good mortgage professional and financial professional. And not all people may understand this. So it's good to ask, or the mortgage broker, do you work with a lot of investor clients? There's no law against asking questions. And I learned a long time ago, folks, that the smartest people in the world are the ones that ask questions. It's not about how much information you retain. It's about being inquisitive. That question why is really powerful. And, it's always beneficial to know that they've worked with these types of, they've done a lot of this, they understand. And I would ask that question when you're even interviewing mortgage brokers and you're looking at investing is, do you work with a lot of investors? How long have you been doing this for? You are okay. You may find you want to speak to 5 people before you settle on someone, but that is okay. It's your business, so you interview. So then we have this word called mortgage financing. And folks, sometimes I see this a lot. I see people start trying to figure it out on their own, or they're calculating this and calculating that. And the one thing I, again, want to strongly emphasize is when you get into investing, so this is going to be a little bit more towards the people that are buying that second property and the third property. doesn't work the way we may think it works with the first property that's our personal. This is so important. I got caught up in, and I was thinking the wrong way. And I'd learned, once I started learning, oh my gosh, it works differently. So, being a guide to just follow, it's important. So the other thing I just want to highlight here, folks, is when you're buying versus, pre-construction, just some things to kind of think about. When you're buying, it's like you might buy a property, maybe the mortgage is 25, 30 years. When you buy pre-construction, the value on it, maybe it's only the first 15 years that we see. Because when you buy pre-construction, the market's strong, markets is scaling. Usually what happens is it tends to gain more equity. It works even before it's built. You live through the mud, you live through this. And if you're okay with that, you can gain more in the equity on your return on investment. When you're buying an investment property as well, something I just really want to emphasize is it's typically where you have to put 20% down or more. If it's a rental, sometimes they want more. So if it's zoned as a student rental, they may want more. So it's the qualifying. It's your first property. What are you going to expect? Your next property, sort of, what do you expect? So this whole discussion, folks, around real estate investing, where to do it, why to do it. We will be sharing more of these types of videos, and we'll probably put even more together because there's two different types of investing. You can do it there's lots of different types, but you can invest in the mutual funds, stocks and bonds, or there's real estate investing. But I feel that when we start to see how it works and why is it being driven, it really does help. There's criteria that you look for, and there's different types of investing. As a recap, the 4 different types of ways or homes, if you will. You can invest in a resale. That's a home that already exists. It's up. It could be a condo. It could be, it's already built. Or the other is you can invest in pre-construction. But when you're doing it pre-construction, you are buying a contract. That's essentially what you're doing. You are buying, they call them, they're basically agreements, but they become contracts. When you buy anything that has a condo component, and if it's pre-construction, you have what they call a 10-day cooling off period in Ontario. That allows you to go, after you've signed the agreement, you give them the first amount on the deposit structure, because when you buy pre-construction, they're looking for their portion of the down payment, if you will, but they ask for it in installments. And it's usually a small percentage on the time you sign the agreement, and then you give them post-dated checks. But for the actual agreement, you've got 10 days to sort of firm up, if you will. And that's where you may want to take it to a real estate lawyer, one that knows pre-construction, and go through the agreement and just make sure you know what it is. Because when you buy pre-construction, folks, there's also what we call construction fees. And you want them capped. If not, sometimes they can be capped 0, but these are fees that show up when you go to close, and they don't put those fees in a mortgage. So there's just all this hidden stuff. So it's, either way, whether you're going to go and pursue it tomorrow, you want to start doing homework around it, it really is what we call the beginning. Because if you take action, it's never going to be the end. And there's no, in the beginning, a right way or wrong way. I've worked with a lot of people in the industry. They may comment and speak and as they say, like, opinion is worth, like, there's lots of opinions, but have they done it before? So follow the people that have done it. Follow the ones where they've made the mistakes, they've learned, they do it differently, they show, but follow those that have done it before. Real estate investing, folks, is a very, 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 could be very lucrative. There are a million ways that you can make money in real estate investing. But if I really want to try to simplify it to digest it, there's 4 different types of properties. condo, condo town or town, freehold town, single. And then when we get into the single, we can do a duplex, a triplex, potentially a quad. And then we get into a whole other discussion where you get into multi-residential. We are in that arena from a development standpoint out east. So, but that'll be 2021 when we'll start to share more around there. But start speaking to people. Find out people that have done it before. Go on YouTube. We're in such a world of a wealth of information, but vet it, go through it. There's a lot of momentum going on right now. And there's a big question in our Ontario market, and that might be what's going on. But when it comes to real estate investing, over the course of time, folks, it's never going to be how much money you make. It's going to be where you invest your money, how you manage your money. And I have seen people who, you know, they make an average income. They do what they, you know, they might not love what they do. They might love what they do, but they've invested in real estate and they stayed the course. And even over a course of 10 years, 15 years. And I've seen people create upwards of $2 million in that time frame. So it's very, very doable, but you want to speak to the ones that are doing it or have done it before. So on that note, folks, I would just wish everybody a wonderful evening. Keep following us. More to come. If you have any questions, we're easy to find. You can check us. We will do more and more on the engagement side. We're a click away. So we're with Keller Williams. We're CC Realty Group. We're up in Kitchener. We're in the Burlington Hamilton, and it's a great place to be. And on that, I just wish everyone a very, very blessed evening. And thank you guys for watching, and keep following. Bye for now.